Ready? Yes. Hello everyone, my name is Paz Gonzalez. I'm the founder of Crypto OGs and OG Media. Welcome to this panel about stablecoins and CBDCs. That means that they are digital coins that they are regulated by some institutions, governments in this case. With me we have today Mr. Nick Patel and Mr. Alex Filatov. Please introduce yourselves. Nick, go ahead.
Hi, how are you? Thank you for having me on. As you guys know, my name is Nick Patel. I'm the CEO and founder of Clink Gold. Clink Gold is a company that effectively monetizes gold held in central banks. To date, we're working with 5 African countries, and what we do is effectively CBDC, gold-backed central bank digital currencies. I'm also the founder of Bank of Bullion, which is a physical metal distributor in Dubai in the Middle East.
Impressive. Alex, what about you?
So yeah, Alex Filatov, I'm CEO of the company called Everx, which is a core developer of the Everscale protocol. And with Everscale, we have a number of stablecoin and CBDC projects around the world, so the relevance. And also I'm an angel investor in a number of blockchain and AI startups.
Perfect. So let's start and talk about digital money. Let's start with you, Alex. Tell us your general opinion about stablecoins and CBDCs. What do you think is the main challenge?
I mean, they're separate, right? So let's take them one by one. On CBDCs, I think there are 11 active projects on CBDCs in the world now, and like 100 central banks are looking at projects. We also the big experiment in Nigeria with their CBDC going like full scale retail, and it kind of failed really. And I think one of the reasons it failed is Nigerians could not figure out why it's better than USDT, which has massive adoption in Nigeria. And we can talk about that probably in more details, And the adoption did not come, one of the 200 Nigerians, despite all the incentives, used it. So a lot of central banks are piloting wholesale kind of bank-to-bank CBDCs, and that's pretty massive. Retail, I think, besides Nigeria, Korea is currently undergoing 100,000 people experiment with CBDC, and I think it's looking kind of okayish. And then, of course, China. China has been doing that for 3.5 years, and there are like 300 billion in turnover already of the CBDCs in China. So I think it will come, but we'll talk a little bit about some technical challenges and about the balance between privacy and control and censorship. And on stablecoins, that's another whole thing, but I mean, USDT is as big as the, Visa and MasterCard combined probably by now, so we have massive adoption, and there are new projects like, Paxos, PayPal, so I'm a big believer in the different types of stablecoins developing further.
Well, I think we are very early in this part, right? We are very early in Web3. We are like internet 30 years ago, maybe. So, okay, tell me, Nick, when it comes to challenges for stablecoins, how do you think it impacts the communities and the users?
One of the big problems I've noticed, not only in the stablecoin industry, but certainly even in CBDCs, is the inevitable evaded audits. Now, one of the big ones that we always had a problem with was Tether some years back, and the problem is not the fact that you trust the digital currency, it's the fact that the people behind the company should have been able to create there should have been regulatory guidance to provide these audits, but more importantly, there should have been an oversight and transparency as well. Now, when it comes to the retail market, inevitably it's not the institutional markets that should get all the sort of favoritism. The retail industry should also have full access to what is happening in the stablecoin industry. So, if you ask me, I think there needs to be more clarity. I think there needs to be open books at the back end. There needs to be more, I wouldn't say over-regulation, but I think there needs to be a certain amount of regulation that allows anybody holding a stablecoin to see if there's real money behind that stablecoin. That would probably entice me to hold a fortune more in Tether.
Well, I think in all this cryptocurrency world, Web3, I think what you said is exactly what is happening. Actually, The problem is that you don't know if you want fully regulation or no regulation, if you want decentralized fully, or you want to find that middle point, and that's why sometimes I call it Web 2.5 before we go to Web 3. Okay, so Alex, talking about something that you said before, we have many stable coins that they went off the market. How do you think the regulations they play a role in that?
There are a couple of things while projects don't take off the stable coins. One, I think most of the projects, and I'm following quite a few, and we also did a couple of stable coins around the world, is you have to fill the stable coin with liquidity, and that's and of course the backing, of course, that Nick already mentioned, and that tends to be expensive and difficult, and a lot of projects are looking for some shortcuts on the backing side, and also struggle on liquidity. So that's kind of one big chunk. The other one, of course, is we all remember, I don't want to use any names, but we remember the names, the algorithmic stable coins that fell massively, what was it, a year and a half ago? Yeah, that's when there is like a pressure and run, they don't work. And even some of the big ones, we all remember the famous DPEC of USDC last year, when over the weekend there was a little bit of the selling pressure, and we saw 8-9 cents DPEC of USDC, which I think did some damage to the industry. So those are some of the reasons why projects struggle.
Can I just add to that?
Of course.
What I also feel with a lot of the stable coins is they try to complicate what is actually something very simple, putting algorithms at the back, creating leveraged positions. Ultimately, it's away the stability of the stable coin. It needs to, in my opinion, stable coins should be stable. They should be backed by real-world assets, property, gold, the significant assets that are not as volatile and are easily available or made liquid. Should that stable coin have a run? But when you have, for instance, a stablecoin operator is buying government treasuries that are locked in for 1 year, 2 years, 3 years. There's a run on liquidity. Sorry about that. So I think the best thing most stablecoin operators should do is keep it simple. Keep a real-world asset and stop putting the algorithm, stop putting leverage positions, stop complicating things to get maximum returns on the back end for the operators, and think more for the consumer.
I'm going a little bit out of the topic, but I know you work with backing up with gold, right? So gold has been one of the things that is being used to back up these stable coins, right? And what do you think about other real-world assets, like property, like?
I think, given the expertise of a lot of people in the industry, if the person has the relevant expertise, then you can create a real-world asset using any strong asset, like for instance, as you mentioned, we use gold as a central digital currency. Effectively, you can use any asset. The only difference is with hard assets or property-based assets or other assets is the liquidity fund. If you can, if you can sell it rapidly, it creates a really good option.
I would probably add just 2 cents to this. I'm a big fan of diversification in the backend, the asset base, and also some of the recent experiments that I've seen that I found interesting is the use of liquid staking tokens as a collateral as well. So just to add 2 cents to what Nick was saying.
Thank you. I really like these off-topic things because I think it's more natural for everyone that we speak as we're here discussing anything, right? Okay, let me go back to the questions. Alex, how do you think governments and central banks can collaborate to lower the risks with the stablecoins?
I think most of the governments would love to regulate the stablecoin space more. I'm actually fascinated by Tether, no advertising for USDT, but that balance between keeping it independent from the governments, and then obviously collaborating with some of the different types of institutions that certainly put pressure on USDT in terms of, transparency and fighting the criminal money, etc., etc. Some, sanctioned regimes, etc., etc. So, but that's where I would love that the balance would be kept there, is that the governments provide very clear regulation, and they still leave the space for private institutions or for groups of companies to launch a stablecoin-based innovation. Because if governments take over the segment completely, I think we will see the same challenges we see in the CBDC space, extremely slow. I mean, my company was participating in a tender for CBDC in France 5 years ago, and there is still no CBDC in Europe, right? So it's extremely slow. I think it's conservative on the technology. For example, they mentioned Nigerian CBDC was done on Hyperledger Fabric, which is a great protocol, but I think there's better stuff out there. It is getting a little bit oldish. So I'm for that balance of providing very clear regulation and then allowing individuals, companies, private business to innovate within that framework.
Which country or which area of the world do you guys think will be the next one going into the next CBDC properly?
In my experience, and specifically I work with Africa. Africa as a continent, 55 odd countries, 1.4 billion population, almost identical in size and population to the likes of India, but the acceleration I've seen in Africa over the last 3 years is exponential. I can tell you the ministries and the central banks that I work with, the timeline to work with these central banks is anything from 3 to 6 months. So, compared to the Western background I've worked with previously, where I've dealt with American or British or European companies, personally, I find the Africans a lot more easier to do business with. They're extremely agile in making decisions. The red tape that I've seen predominantly, especially in Europe and the UK, is not as prevalent as it is in these African countries. And the reason for that is very simple. The adoption of whether it's CBDCs or any digital currency is mainly because, I'd say almost half the population, it's 45% statistically, or 675 million people do not have access to banking. Therefore, they're relying on their mobile phones to make transactions, whether it's locally, internationally, and automatically that creates that need for the digital currency and the crypto markets, right? So where they don't have access to ID, regular banking, you suddenly have a booming market for cryptographic transfers. So I think, a lot of people have not perhaps seen the opportunity in Africa, and I think it's going to be one of the biggest coming out the doors over the next 5-10 years.
Amazing.
I would probably just chip in, China is of course my favorite, and it's the most advanced. It's really paving the way. If I remember the numbers well, last time I checked, it was over $250 billion transacted in digital yuan and 120 million wallets. But this is probably 2 months old information. This is massive. I mean, this is scale already. And as I mentioned, Korea with 100,000 people pilot, it's pretty serious. So that's kind of my second favorite in terms of the, who will be the fastest and who is taking it really all the way retail. And I hope Nigeria will relaunch. It's a shame if they discontinue their CBDC.
That's good to know about Africa, about Asia, and just I want everyone to know as well, because I'm from Latin America, I think Latin America is also an area that we need to look at. The inflation in certain countries is getting affected, the normal people is getting affected that, and I think if they have access to stablecoin, I think it will be great for them, so they can keep the value of the money that they have. Okay, let's move to another question. Nick, with the potential bull run coming, what do you think is going to happen with the stablecoins? Do you think it's going to be any changes? Do you think the traders are going to start trading more stablecoins, or?
Well, they'd have to trade in stablecoins to get to any of the other coins, right? So they're running in pairs. So I'm guessing the likes of USDC, USDT, all the main ones will probably have their time in terms of volume. I just hope the ones that are using or ones that are being used are they're doing their due diligence, they're checking that the reserves that they're quoting are really there. I hope they're doing their research in the background to see whichever stablecoin you're using, you're obviously protecting yourself. But do I think there's going to be a bull run? I can't predict the market, but it feels like the time is right. You know, the likes of ETH and BTC have slightly come up good. And the problem is, this is the problem with trying to predict a bull run. Now I'm going to bars, clubs, restaurants, pubs, family events, and people are talking about crypto. So automatically, in my mind, I'm thinking it's perhaps a little bit too late, because this is where the layman starts coming in, and that last push comes before the next pullback. So I think, you know, I'd be cautious at this level, but I think over 24 and 25 there would be a bull run.
Yeah, well, I think to be cautious is the most important thing. Doesn't matter if we're talking about stablecoins or we are talking about any other type of crypto. I think that's something that we all need to know from now on. And everyone that is just starting in crypto needs to be cautious on how they do any type of trading or anything. And I want to ask you something that my husband asked me, actually. He asked me, but why I should put my money into digital currency? Then any government can come, lock it, and then they have the power of us. So we cannot travel, we cannot do anything. So how do you think we can try that not to happen? Because it's true. If our money is all on digital and something happened and they block our money, we cannot do anything. So how do you think we can make that not happen?
Want me to start? I can try the technological angle, and maybe Nick can take the other angles. So I think that's, by the way, one of the core issues why for example, Nigerian digital currency did not take off, and why the governments are not launching more retail CBDCs, is because the population is afraid of ultimate control over each transaction. I mean, you can program stuff into CBDC, for example. You can take taxes per transaction, which generates income. So it's in terms of kind of surveillance and control, CBDCs is the next level, and people don't like it. The only kind of technologies that I see today that can help that is zero-knowledge based protocols and solutions, which can help reveal a certain information without disclosing the identity of that person. So I think as zero-knowledge technologies take off, and there are quite a few, we don't have enough time to go through them, but there are quite a few that are shaping up into robust solutions. They will bring that balance, as long as the governments would be ready to use them, because of course what governments want is they want control, right? So in fact there are some countries, for example Korea, that a couple of years ago said, I don't think it was a formal, but it was like, if you use zero-knowledge in your solutions, we will send you subpoenas, whatever is subpoena in Korean, I don't know. So, and the protocols were scared of using ZK. So as long as the governments would embrace that technology, I think that's a way to find the right balance.
What are your thoughts, Nick?
You know what, actually I completely agree. As a provider of a CBDC, I know government has the capability to actually stop any of your payments. But if I put it in a different frame, the government of India, through demonetization, got rid of the 1,000 and I think 500 rupees as well, shortly after. So both effectively take away the money from the general public. So there are means and methods outside of digital currency to stop payments. They can change notes. And if you're holding illegal notes, then they go out of circulation as well. So there's a lot of things government have in their war chest or toolbox, if you want to call it that, to control not just the money supply, but how you spend it, because ultimately how you spend it is also controlled by the taxes you're paying. All of these are traceable. Your bank account is traceable. Every one of your digital payments is traceable. Your phone is traceable to all the network towers. So you can use triangulation to know where you are, even if you're making a fiat payment. So, I admit this is definitely giving a lot of power to the government. I can tell you that for certain. Blockchain and digital currencies and the way things are moving, it will be, as Alexander mentioned, there are other options out there where you can store your wealth that is completely off the beaten track, but it's how much of your risk appetite you're willing to put your money into something that perhaps might not be around that much longer.
I think at the end we just need to find a balance between what the government wants and what we want. I think that's the... I learned a lot about all the stablecoins and CBDCs. I'm really happy to have you today here. And I hope you guys learn as much as I did. And thank you very much.